on. Okay, and we're starting in a few seconds. Good morning, everyone. Welcome to the breakfast webinar. It's 8 a.m. Eastern on Wednesday, the 18th of October. I hope everyone's well and you're having a good trading week so far. We're basically halfway through. Quickly, let's move on to the disclaimers. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, let's move on to get rid of that. Get the, yep, I'm actually going to say hello today. So hello. I've created a new bubble today, so I hope you like it. I've also got a different audio solution. What that does mean is that when we get to the news at 8:30, and I'll quickly flick across to the, I will quickly flick across, in fact, I'll just move that up to the slideshow. I can turn on the news feed so that both Discord and YouTube should hear it. That's the 8:30 a.m. housing starts. So let me just pop the image on. Let's just go back to the first page. Okay, yep. So just a heads up on what we're preparing for today. In orange, we've got the USD building permits or housing starts. On some economic calendars, that is marked as red. So it's borderline whether, that's orange or red, or, a real market-moving event or not. And then throughout the day, you've got some Fed speakers and the Fed budget bounce in the afternoon. And importantly, it's already the start of earnings season. So in the last 2 hours, we've already had Morgan Stanley's results and they've gone down, or their share price has gone down considerably. I think we're talking about 2% or something on the release of those earnings. Not quite sure whether it's picked up since then. Okay, so in terms of, let me just go back to that. In terms of what we're going to focus on today, if you've got any issues at YouTube on the sound, just feel free to type in any comments or questions at any time, and the same applies to Discord. I'll happily take any questions or feedback. In terms of what we're doing today, I spent an awful lot of time looking at education and ideas in the last few webinars. So this particular session is more a day in the life of someone that is prepared to take trades in ETH. Let me just get the screens up and running, because you can probably see what's happening right there and then. NQ is breaking down. And by the way, the only change on the actual screens for Bookmap today is that per one other occasion, I've actually got them side by side. So we're hiding the trading view 3-minute, 1-minute, 5-minute charts, and we're just going to have a look at this. I thought it would be interesting, especially since we've got an economic release at 8:30. And since I do talk a lot about how resting liquidity in one can affect the other. At the moment, if you have a look at this, I don't think I've quite got the zoom on exactly the same level, but you can see that the liquidity, or the resting liquidity in ES, is a lot more stable than these algo bands in NQ. So a lot of them, a lot of that's just rubbish in NQ. What we have to remember, as we have talked about previously, is we have to look a little bit harder at the actual numbers in the order book column in NQ to find those resting order book levels. Anything above 30 may grab our attention, but when we go back to having a look at what happened in the London session, we can see how that could have been helpful to us. Anyway, I just wanted to show that little breakdown in NQ. Let's go back to the slides. Okay. All right. So we've done the calendar. The daily. I haven't moved these trend lines from when we drew them, last week or the week before, and NQ is still breaking down, so a little stop run. So this current downtrend, the new downtrend on the daily, is intact. On ES, it's got nowhere near that downtrend line. In fact, we could draw a sharper one down, but I haven't. It really is a little bit subjective as well as objective. As I say, it's a proxy for liquidity on every time frame, and I use it more on the daily and the very, very short term. And when I say very short term, I'm talking really that 10, 15 second type chart that I trade off. That's where I find them more useful. I can see trend lines on things like the 3 minutes, 5 minutes, 15 minutes without actually drawing them. When you've drawn them a long time, you don't actually need to keep drawing them. It's just on the very short term time frames, I find them quite useful to actually help with setting up a trade. Okay, keep going on the slide. Let's just quickly churn through these. There's the 15 minutes. Again, the purpose is to see where we are in relation to yesterday's range. And in ETH, which is just about there, you can see that we've spent a lot of time not doing an awful lot in ES, and mainly just in the bottom half. So it's not overly bullish in ETH, but it was tradable, and we'll get to that. Okay, NQ, same again, except it was basically right around yesterday's mid, and that's why we need to look at the value zones on that TPO chart, the VP, the volume profile chart, that I'll get back up in a second. I haven't screenshot them because I want to go through the process of drawing them and why why they're still useful when the value zones have been taken out. Okay, let us get rid of that for the time being. Okay, so there's me again, so hello. Right, okay, let us have a look at this. I've also got a tab here, by the way. Let me just move this one across. The tab here, it's a completely blank page where we're going to write some stuff, and it's going to relate to doing this job, which is to take trades per your trading plan that appear in ETH. And I'm going to just jot some notes down as we go along. Right. And the first thing that we normally do with this chart here is to find where the last value was in the RTH session. And again, RTH is in white. So yesterday's RTH is this big range session there. And the value that I'm concerned about is the value around here. You can see the last few bars. These are all time bars. So these bars towards the end are the latter bars of the afternoon. In fact, if you look at the bottom of the screen, you'll get the time of the bar. It's in pretty small font, but you might be able to read it. And the red triangle there is where it closed, settlement T+1. So the whole purpose of splitting those is simply to find out where the value was. And then the first job that I really do is, it's like a Tom idea. It's the auction. Where is the most recent auction? This is what I drew. And I've shaded it in light purple. It's just an extending rectangle, so it's a rectangle which just keeps going to the right. So I drew the value from around there to there. So if we write this down, it's sort of, determine last distribution. That's what I've been calling it, and that's what it is. That's what I'm interested in. Why am I interested in the last distribution? It is simply because a lot of the time in ETH, especially when there is no major news and no major relative volume, i.e. the big boys or girls have not been playing, we often play games. I call them algo games, but just games of tennis, ping pong, whatever you want to call it, between the bigger players in this type of value range. That's the reason why we draw it, okay? So determine the last distribution, I'll just put it in the other language. It's from mean reversion type session. Basically, that's where we are most likely to stay in this. But on this occasion, we actually broke down out of that value. And if we zoom back out, you can see that we're in, quite a large value, wider value zone. But I tend to focus on the very last value. And when we go and do that, I am thinking, and it's just a thought because I can never predict the future, that once we've broken out of that value, there is a probability that we will continue to explore and auction in that direction, which is the direction down that we broke out in. Aha, a question. I'm actually going to talk about options, Pharaoh. I think you need to, well, no, I'm not actually going to tell anybody what to do. I personally like to see where the bigger money is traveling. You and I cannot move the markets, Pharaoh. So I'm looking to find out where the bigger money is moving the markets. They may be moving them in the futures market. They may be moving them in the options market. They may be moving them in the ETFs. They may be moving them in individual stocks and other ETFs that, that we won't be paying an awful lot of attention to. Remember, what they want to do is to move their money efficiently from high to low or low to high, and they want to disguise that quite a lot. So the algo games that I'm talking about in this mean reversion inside a value area is, that it might be bouncing up and down, but they, being the bigger ones, if they're going down, they'll have sold towards the highs and bought towards the lows. They may do it multiple times to get it from there down to there, but that's just a game. And your other question was, what do you do once the value shifts? Well, all I can do is say that there is a probability which relates to auction theory that if they start exploring in this direction, that they would then get into this value here, which is an earlier value in yesterday's RTH session, and then go and attack yesterday's low, which was the bottom of that value. It's only a probability. It can be completely wrong. And the point is that if we're wrong, as long as we stick to our trading plan, and we have accepted or we've modeled per the expectancy calculator or whatever modeling that you do, that you're going to be wrong many times. So it does not matter, all right? As long as you take good trades that have expectancy, that will get you multiple R's, and you're taking a very similar or identical dollar risk on every single trade, it does not matter whether you lose a trade. And I do need to state that every single time. If you're going to follow people or you're going to go and look at indicators and it's all about win rate, 90%, 95%, 100% win rate, all this artificial garbage, it will not progress your trading because this is a casino mathematical game. Scott, yeah, sure. The chart in question, it's a combined chart. You can do it in CRI. Great. Somebody asked me about this, but the dots or the bars are just time, and the line is volume. So it's a volume profile superimposed upon a time profile chart. That's all it is. And the reason why I've got them superimposed is so that I can split it up. Okay, so yeah, so I just want to explain that there is some probability that once they break down from this value that we'll get into the next value and then we'll explore all the way down. Remember, they don't have to do it in ETH. This is a long day for them. There's lots of news and lots of Fed speakers. If they are going to explore down here, that could well be an RTH. It could be at this 8:30 news, which is in 17 minutes. But yeah, I was just explaining what I do and the fact that sometimes drawing this value zone will capture it because it's a low relative volume mean reversion type day. Other times there'll be some rationale for why they just a minute. I'm trying to drag that away. Why they wish to continue auctioning beyond last night's value, or when I say last night, I mean yesterday afternoon in RTH. I'm just going to get back I just don't want to forget where we are in terms of the Bookmap liquidity heat map before we come across to this news at 8:30. Okay, so yeah, so I'll have a look at that, right? And since somebody has asked, yes, I do look at options. Yep. So I look at options from the perspective of a liquidity perspective. And it's got more rationale this week than it may have some other weeks because we're in a major option expiry. It's the October options expiry, I think, this Friday. So some of some of the positioning of those options, and we're talking, since I only trade ES and NQ. It's very rare. I mean, I used to trade gold, I used to trade crude, but these days I just find it more focused to trade these two markets in tandem, and some of the ETFs that go with them, than I do to trade gold and crude. I just find it dilutes your focus if you do too many things at the same time. And one of the other things that we're going to go on about in this is, maybe I'll have a heading at the top as well. Let me just move this one down. Let's just have a heading up here. Okay. All right. Okay. And yeah, some of the other things that I would have done today. I've got a family, so I've got other people that I have to take care of. I think care is probably the right word. So there's that. There's it's like, we'll call that domestic. I believe in exercise. Because I believe a sound body leads to a better thinking mind. You get better blood flow in your brain, and you certainly come up with more creative ideas. And you can think more about what it is that they're trying to do. I have other vocations. So other vocations. So I don't make 100% of my income just from trading. I believe in doing other vocations. So there's that. And I also believe in education. So I'll spend a little bit of time every day on some form of education. It might not be related specifically to trading. Most of the time it is. It can be other things as well. It can be things like productivity. It's just those kind of things. Anyway, let's get back to ES. And let me drag the NQ one across since it keeps creating a gap. So yeah. If we're going to get time, maybe I'm going to do this after the 8:30 news to have a detailed look at how we would have been positioned, or how you might have been positioned after the London Open, bearing in mind the charts that we were just looking at, and determining the value and what happened at the Open. In terms of the actual Open itself, again, I'll get to this after the 8:30. It's just because I'm aware we've only got 13 minutes and we really need to have a good look at the current situation of where we are before that 8:30 news. The most dangerous trade, often the most rewarding, is the one that you take into the actual London Open, into the 3 a.m. Open, or just afterwards in case you take some fade. It is the most dangerous trade, and that's the one where it's the most important that your stop is hit if you're wrong, or if it doesn't go through your stop by too much. If the market has a lot of slippage. Anyway, since it's 8:18. Let us focus for a little bit of time on where we are as we come into this news release. So that was the other thing. Let me just pull that down. Macro themes, and let's go back to the chart. Okay, so the macro themes, which we all know about this week, I've mentioned one, which is options expiry. We've got the threat of a Middle East war spreading, where we have earnings, and we have a lot of bearish themes, and yet the market has not really been breaking down. Yesterday, in terms of the reversal around about 10, I think it was 10 a.m. RTH, that was a very, very big reversal up. So the market is holding up. Maybe it's the options expiry is one of the reasons why they're holding it up, because they've got some positioning that they wish to tag on Friday before they let the market drop. But sometimes some of these global events may impact that. So we don't want anything really, really bad to happen in the Middle East, but anything can happen over the next 2 or 3 days, and we have to be aware of that. And one of the things that I keep stressing and doing this ETH trading is that if you see and I haven't got these volume dots here, as I've said before. I've done the delta dots because people prefer them. But if you go to the volume dots and you change this to volume, I wish there was a shortcut or a hotkey so you could switch between volume dots and delta dots. I think I put it in as a suggestion in the Discord channel before. If you're aware of these big macro themes like pending wide-ranging wars, if you see really, really large volume coming into ETH during this kind of time, you don't fade it, right? You just don't fade it. You'll see something which is really unusual, which is massive size compared to the tiddly little size that we normally see in ETH. I know I do my relative volumes, and today's relative volume is smack bang on 100. It's 101 at this time of the day. But if you see that relative volume, for example, shoot up and it's suddenly way over 200%, that there's some big players around, and you've got to be very, very careful with what you do. Anyway, let's get on to. Let me just move this chart out of the way so we can see where we are going into this news. Okay, so we've got a 3-minute chart. I'm trying to get them both as squished in as possible. Yeah, so I'm just squishing them in. We'll expand them in a second so that we've got the whole of the ETH session. Essentially, if I do a 1 minute on what's happened in ETH, and most of it is the value before the breakdown there, is that we had an early move down at the China Open. Asia became positive and basically had a strong V-type reversal and then a gradual trend up. Into the German and London Opens, that was reversed again. We went to the other end of that value, and then we had another V-shaped type reversal with a lovely little trend channel, and then right bang at this time, which was 5:15, we reversed down. We've got this lovely little continuation zone here. If you see this, I mean, I don't talk about price patterns too often because that's not what the purpose of this is. But if you see a big break and then you see them consolidate in this kind of range, the probability, and we'd also basically had something close to a double bottom before, the probability is that is going to continue. It does not matter that it's come back. There was big opportunity there if you're looking for short-term trades to get a 2, 3, 4, 5R type trade. So, big breakdown. Often you will not get a pullback because they want to go somewhere. Here they want to go down here. So you'll just get this little ranging action where they refuel and then they dump it. And when you look in Bookmap, you can see clues in there with the resting liquidity or the way that they move the order book around to give you a clue that these little tails up above were rejection tails and they were going to continue going down. 2022. So we're basically smack bang where we started in terms of value. Or are we? Let's have a look. Let me have a look. We are in ES, in NQ we're not. So if I drag down the NQ value, if it will behave. So the one I drew in NQ, it was easier to draw. There was a lovely little LVN there. This was the last afternoon value. And essentially, just drawing that value can often give you a good range. So you're in the right kind of zone for some of those fade, type C SD trades where it's essentially a spring of a previous low in an ETH. If I can manage to break down that, it gets you into the right kind of zone for that trade there. And again, you do not need millions and millions of trades. And you can scalp, and I have absolutely nothing against scalping. But a few trades in ETH can certainly help. What you don't want to do is take a trade, fade it, and let your stops run. That is not the game that we're in. We're in a casino where they've got an edge, and they will not. If you do not stick to your own trading plan and your own rules on stops, you will get taken to the cleaners. Okay, 24. Again, I've got to keep watching for the news. What I will do is test the audio feed out. So right now I've got Financial Juice on, so you can hear it as well. They're not actually talking yet, but as and when we get closer to 8:30, You should be able to hear it as well, both in Discord and in YouTube. They are my friends. I know Amar quite well, so I do not believe he will mind if we have it on for a couple of minutes during a news release. Okay. Let me just drag that one back. Yeah, so yeah, we'll do this news release. What I'm not expecting is an awful lot of volatile action at this particular one. I just don't think it's going to be a real market mover because of the other themes that are going on this week. So yeah, but let's have a look at the liquidity map here and talk about some of the stuff that we've often seen.
383 million on the
so at the moment, they've added a lot of liquidity and they're pushing the market up. So you can see with the way that the ES heat map and the way they've added these zones, and we're not talking about individual price levels, they've added nice thick zones and they're just pushing price up.
Month over month.
And you saw that they put this level on here and they're pushing from here onwards. This is the point of zooming out. You could see them push price into this resting liquidity that they'd placed here. In fact, they'd moved it down to there because they wanted to get filled. So there's some people out there, who knows whether they're right or wrong, but they wanted to get filled so they could most likely go short and take this down. And we know from looking at the value that there is a potential of a continued auctioning or exploration lower, just on the fact that we broke down from yesterday afternoon's value. Yeah. So yeah, just directing the question back to Pharaoh again. Yeah, with volume profile, it's not about being exact. None of this is about being exact, right? It's about having good ideas to help you find high expectancy trades. Right, and accepting in every single one of those instances that it could be one of the many, many trades in which you're stopped out. If you go back to YouTube and last week, I think it was last Wednesday, so 7 days ago, when I was doing that expectancy calculator, you'll see that from my own personal perspective, I model 50% wrong. It's not because I think I'm going to be wrong 50% of the time. I believe I can do a much better percentage than that, but I do not want my focus to be on win rate, because win rate is the wrong focus in this business. That's my personal view. Okay, 4 minutes to go. So yeah, so some of what that they were doing there, I was saying, was it looked like they were positioning to get people to take it up here so they could short there and then take it back down here. So what we then look at is the delta column in Bookmap to see whether there's much green fuel to go down. In other words, they go up to go down and go down to go up. And we have a look at what's going on in... Yeah, it's interesting if we draw a line in NQ. So you can see the trend line that's effectively there. I know this isn't an exact trend line, so forgive me on that one, but you can see this trend channel, where they drove it up in NQ because the resting liquidity is not very helpful, and that's now been broken. So what I've been suggesting is that there is often a good probability trade where you've got this strong channel that has gone up and up, or has gone in a certain direction for a long time, and then that's cleanly broken. The trade back up or back down in whichever direction you're going in this case it's back up to the supply zone, which is roughly around about here, can often be a good short. So the market's going to make a fool out of me quite most likely, because we do not know what the future is, and it may well not go down. But I'm just saying that is one setup that I've seen time and time again, and it's happened many times yesterday and today as well. So where are we now? We're at 28, 27. So I'm curious as to why there is nothing so far from financial juice, but it doesn't matter. I will tell you what the numbers are anyway if we don't get any sound from them. So I've got to get back to the cursor. I keep forgetting. I'll leave that trend line there just because we can leave that market exactly as it is. So as we go into the news,
1 minute
we zoom out again,
I'll be leading with the US
they've left these blocks of liquidity to fill, right? So there is an incentive, if these are magnetic, for them to dip into them at least. And now we're going to zoom right in on the time frame and watch to see whether we can get any of them. So we then look at the numbers. So there's 263 there in the order book, And you'd probably have to add in 3 or 4 levels to get what the true level is there. What time is it now? 30 seconds to go. So they're adding a little iceberg here. There's been a break there. My trend line, I think, in NQ is now no longer in position, so let's just ditch it. The MBO stop run, because I've got delta dots, it does 2 purposes. It can show stop runs, but it also shows large trades. And the thing to note is that a lot of the time you'll get large trades towards the end of a swing.
That is lower than the forecast of 1.383 million. Building permits number at
Let's see what
1.473
happens. Where are we
million,
now?
1.473
No, the
million.
news
Higher
came
than
out.
forecast, 1.453
Got
million.
absolutely no noise out of that
Housing
feed,
starts
so I'll
change month
ditch
over month
it.
at 7%.
I'm not sure what went wrong with that feed. Anyway, the US housing stats number was 1.35 million. The forecast was 1.38, so a tiny miss. So we had a small breakdown, and then it's broken back up. Okay, so basically a non-event. So we can watch this for a couple of minutes and see what else happens, and then we can go back towards London. And what I want to do with that London one is to try and rewind us right back into that 3 a.m. to 3:30 a.m. So what I was saying was with this trend line, I wanted to see whether that happened. Oops, daisy. It's a pretty bad trend line. So yeah, the idea was that they come back into this zone and then break down, but they're not going to do that this time. And the other type of trade that we do like on these is the upthrust, which is the reverse spring. So if we take a line, or we take a little box and we draw it across, it's just taking this out with a fake breakout and then going down. I'm drawing it, oh no, that's the problem with these drawings that aren't native to Bookmap, that they will move. And you're also looking for some kind of triggering action. One of the triggers is this little green tail at the top there. So it came right back to that high, and then we had a nice little break. We've got this magnetic liquidity that they want to get to, but they want the fuel, and we keep saying that the fuel to get down is green. See if there's anything in the NQ heat map to help us here. Right now we can go into the microstructure. So you can see there we're every single one of these little periods is 30 seconds. Why are we doing that? And again, we want to see whether they can make new lows or highs, or whether they're just balancing in a zone. Yeah. In NQ especially, and I'll probably say this 50 times now, if you're looking to go short, but on this microstructure, they cannot get to the previous low, and they cannot going to the previous low. There is a huge danger that there's going to be some final spike up, a final little spurt like a fountain, and that could take your stop and then some. So that's one of the reasons why we look at that. But now you can see that they are beginning to auction down here. So we have a look. We've taken out this little stop run here. We're just below it, so we're finding out here, is this a fake breakout, or do they want to go lower? The chances are they want to go lower because we've got this magnetic liquidity over here in ES, which seems to be quite slow, but it is moving. Yep, and they've tagged it, and they've actually eaten into it there. So you can see they actually interacted with it. That's what I mean when I say that they ate into it. So I'm hoping that that live demonstration of how it is more useful to have these two side by side. I mean, obviously, when I'm trading by myself and I have not got to present a webinar, I'll have the 1 minute or 3 minute trading view charts present as well. but it's just having them side by side, and it doesn't just relate to heat maps. It's like if you've got any other kind of gauge and you've got two markets that you trade both of, having those kind of gauges side by side is also really, really good. Okay, I haven't stared at the camera for a while, so I'll stare at the camera. Yeah, I mean, having a camera is a bit, it's interesting. I hope you like the bubble that I put behind it. It's interesting to find backgrounds. My background in my office is not exactly exciting. And there's also a few reflections off the print that is behind me, so I didn't want to display that today. So they've gone down here. So, one of the things that we don't do, or that you might do, is just scalping off these little interactions. You can see here there was an MBO stop order of 72. Some people might just scalp and try and get a few ticks there. I do not know exactly where the stop was on this one. So, maybe your stop was one tick under that, but that's not a game I like to play in ES. I've played that game before where you try and have a 1 tick or 2 tick stop. I prefer something a little bit wider. Okay, 8:35. I think maybe 25 minutes. It's continuing to break down a little bit. Let's just zoom out again vertically. So you've got, so if that was T1, target 1, that's T2, and that's T3. And maybe there's some more below. So they've gone through T1. They keep going down, so you zoom out to get all the levels. And it'd be interesting to see how far during this particular period, the 9:30, that they go down. Or is this it? Was that all that they wanted to do? Okay, I'm going to try and rewind both of these to the ES and NQ at the London Open. So I'm just going to zoom them in horribly. So excuse this. All right. And I'm going to have to zoom in that way as well. Try and center it there and then begin to zoom out. What I really am trying to do is capture this zone both in ES. Actually, I don't need to capture that zone. I've got a candlestick chart for this, for the trade that was setting up around here. It's this one. It's this is the one that I really wanted to focus on, and I'm going to start with having the London open there, and I'm going to try and do the same with ES. The reason why I don't want to do this in a replay is you'll lose all these MBO stops, and it won't be, I don't know if it's going to be as 100% accurate as just me dragging it back in time. So I'm just checking the time here, yep. Okay. Right. Okay. Where is this? Okay. Here are 6 example TradingView charts of this time frame. So this is essentially what happened at the London Open. The weakest one was the FTSE 100. I've got the CFDs, by the way, as proxies. I haven't got the futures except for the main futures, the CME futures in TradingView. I just don't feel the need to pay for data for something that I don't actually trade. So there's the DAX, the Euro stocks. I've also got crude, FTSE, the bond, and the dollar index. So it was weak. What I was watching most of all was the FTSE was just so weak that there was a good opportunity from a macro or a higher level to look for shorts. So that's the only purpose of this. And then secondly, I've got my, this is a 15-second chart. You can't see the time frame up there. But the purpose of this is to show what I was looking to trade to go down. By the way, it went quite a bit further than this from this. This is NQ, NASDAQ, the NASDAQ futures. This is the time period that we're looking for. It's in that time slot 3 a.m. to 3:17 a.m. Eastern. And the purpose of this is to say, you've got the time on this occasion, and it might not be every single day, but you've got the time to look for trades. So what do you do, bearing in mind what I've been talking about for the last few weeks? So I've got a big move down, right? I'm looking across at the other correlated markets, the ones that are really open at this time of the day. And I'm also looking at the value zone maps that I drew, saying we're in the lower part of value. It's likely we're going to go a little bit lower or quite a bit lower, so I'm looking for a short. So for whatever reason, I'm looking for a short. The main purpose of this candlestick chart is to show you it requires a lot of patience. What will often happen in NQ, and we'll see this in Bookmap when I zoom into this bit over here, is that it will reach a low. I mean, if we say this is roughly the same low, if you look at these, the number of times it goes to that low, 1, 2, 3, 4, 5, roughly the same level. And I don't look at individual price levels, I look at zones. So it's 5 times it hits the zone, right? What happens after that one, though, is that if you're looking in Bookmap, and this is where we're going to look, it cannot get, it cannot meet the previous low. So it keeps going up with a higher low, or roughly, and an equal higher low around there. This often happens where it takes out a low by 1 tick, but it's a quick spike, a very, very quick spike, and I call that the same thing, that it cannot take out a previous low properly. And what you have to do is then look across and imagine that they are going to look for some stops first, some extra fuel, especially if this is the same as the delta profile in Bookmap. So this is like the volume profile with the delta shading. And this is my Sierra chart that I actually trade off. So I do, all I do is, I click on this chart and I take trades. You have to assume the worst. So the worst thing that you can do from a trading casino perspective is to try and take a trade down here. I mean, it may have worked out in the long run here, if you'd had a wider stop, but that's not, that's not really in accordance with any of the types of setups or structures that we've discussed. We've discussed, the best one with the highest level of expectancy, or the multiples of expectancy, is this kind of trade, this one right there. Maybe I should draw that one. Where you've got, here you've got a 1, 2, 3, about 1, 2, 3 levels up, and we'll go and have a look at the liquidity. But the liquidity in NQ is pretty meaningless at the moment because of those algo bands. But that one, because when that goes up, you've got to stop essentially just there, and you're targeting what was the low there. So you're essentially saying that that's 1R, 2R. 3R. It turns out this would turn it out to be a 5 or 6R trade, but that's what you're looking for. And then we need to translate that across to Bookmap, because this is where the Bookmap tool really can help us or not help us. It's really how you use the Bookmap tool that's going to help you or not. So we're now going right into that. Let's get ES back up and running there. I'll have to get rid of that drawing because it will confuse people. So, I can, where is it? Yeah, you can have a look at that while we are zooming right into this. And okay, so this little spike here is that, right? And what, if you're looking at this, especially, if you're not going to do anything as dumb as to try and take it down here, what you are doing, and let me just zoom out vertically, is you're watching the microstructure and seeing what they're doing here, each successive little micro low. Because you can zoom into Bookmap infinitely, this is where the tool really, really can shine. So you can see that, once it has this little spike down there, and I've just got the grey lines are just price. I'm not using the bid or ask lines, I'm just using price, and I'm making it as dark as possible so it does not obscure the rest of the heat map. But what you can see is that you're getting these little spikes down, lots and lots of little spikes. That's a clue to me. It's like a tail on a candle. And, you know, we're going up. And every time we get to a level, I'm watching that level to see whether they can actually auction any further in that direction, and they couldn't. And again, you know, if you have your cursor there, you can see they could not auction it any further down from the 15184 level. So, you know, you're expecting these little springs because they can't auction down, but you're looking for a spike up so that you can get down with your trade, and you've got the clue of where to look for because you've got this. So you've not just got swing high, you've got some nice little liquidity where they hinted to you, they advertised that they'd really like to fill some of their liquidity. So it should not be a surprise to you if it goes back to that level of liquidity, and actually they manage to spike it even higher, which means they get even better prices, they being the bigger boys who want to short this, to take it down. So if it goes up, they get a better price to go down. All right. So, you know, when we zoom in, and I think most of you know that I prefer trading NASDAQ at this time of the day just because the moves can be easier to read, but they're more likely to give you these multiple R returns. So you get that with these delta dots, you get these nice little delta spike up and then a fail. So, you know, how you get in, whether you get in by market, you get in by limit or whatever you want to do there, but you know where your real targets are, which was the prior low. You know, you had that quadruple bottom that we just talked about, the quadruple, quintuple bottom. And that's really what I wanted to focus on, you know, of the typical kind of NQ action, you know, this thing here, where they toy with you. You know, they're toying with you there. 1, 2, 3. That's an even worse toy because that's like misleading you into thinking that they're really going to go down now. But that's just a tease to trap you, so they can trap you, take your money, drive it higher, get an even better price for them, and smash it down. Now we'll look at ES in that same time frame. So what we really looked at there was the time from 310 through to 317. So just got to zoom out again. You really have to zoom this one in vertically. So what I'm saying is that if I manage, I don't think it's got a global cursor. No, I haven't got a global cursor. But this here, and you can see the time there. Oh, no, sorry. I've got the time wrong. The font is too small. Let me just go back. It's the problem with trying to zoom in and find things. 3 o'clock. Okay, yep, here we go. So in ES, it's probably better to draw this as this little microcomposite balance, you know, and you could extend it back over to that previous low there, so you could actually, if I get rid of that one and we redraw that, yeah, even though they went down, they went back into this bounce area. They just take it out. That is exactly, well, that should be, if I get my cursor working, that should be 317.31 and 317.50. Well, basically, if I zoom that one out a bit, drag it in. Yeah, that is exactly the same as that. So if you have these side by side, and we'll just move them up and drag that one up as well. If you have those side by side and you're trading either one, whether it's ES, I'll get rid of the rectangle, whether it's ES or whether it's NQ, hopefully you can see how that can help you. I mean, in addition to the fact that they both had a little up thrust or breakout failure upward spike, you've got this liquidity in terms of possible real resting liquidity below in ES, and you've also got some in NQ, below as magnetic targets. So I'm saying that this resting liquidity in ES is probably more helpful than what you can currently see in NQ, and there's nothing I can do to filter out these algo bands, unfortunately. But that's the idea, that these trades, you know, especially when they start toying with people, they can really set up some beautiful spikes to get you into those multiple R trades. You don't need many multiple R trades. You know, if you're averse to scalping, you know, if you if you just wait for this kind of nasty action, you can get yourself some great trades. Meanwhile, let's go back to current time because the market is, and this again, that was the question. What happens if the market breaks out of this value? It is likely to explore down. We're getting close, we're almost into this value area. That's why we've got this there. It's potential. It's not 100%. It's just a potential. And even if they were to get down there, there are going to be many, many games up, down, up, down, up, down before they get into this. But that's the reason why we have that one. So now, remember let me grab my pen. I haven't drawn yet today, have I? So, if I see if the pen's working today. Come on, pen. So this was T1. This was T2. This is all zoomed in. So we're now in T3. This is looking at each magnetic liquidity as a target. Then you've got T4 and potentially a new one down there, T5. So I'm just saying that once they've got their fuel by going, let's change colors. Yeah, so once they've got their fuel up here, fuel, it's down towards these liquidity targets that they've provided for you so you can see them. So, on this occasion, you want a fairly tight stop above that liquidity wall there. And this could have been a 4 or 5 hour, maybe even bigger type trade as well. And it's not the value zone that gave you the exact indications of where to take the trade. It was something in that value zone that gave you the idea that this kind of auctioning down may continue. And then you look at this kind of stuff inside Bookmap to get you that 5R type trade. Let's get rid of that. So you can see that I've still got a pen there. Let's get back to the cursor. So hopefully you can see that could have been useful, or that may have been useful to you. And you've got this previous swing low, which we're very close to now. So here we see a big stop level there as well. They've hit 587. So there's a large trade there. I'm just looking across at some of my other stuff. I'm seeing a bunch of trades there, and they add up to over 600. So it'll be interesting to see whether they need a pause now or a slight retracement, or whether they've got enough energy just to keep going. And if you look at the level from the previous one, you can see it was 1. So only 1 contract traded. And I can always drag this in to make that even clearer. So I'm just saying that is the perfect example of a rollover. You see that 1 there in the CVP column. A single digit transactional number of orders transacted level is the true definition, or the best definition of what a rollover is. Yeah, so when I see these icebergs after this kind of run, I get suspicious. Maybe it's just in my nature. So I see a sell iceberg and they've got 139. I'm thinking that at some stage they want to use that to squeeze back up a bit. The sell iceberg is to push it down, hold it down, while they get enough red in the delta column to then take it up a bit. And remember, some of these people can have completely different targets from others. So some of these giants may just want to get 2 points or 3 points. Some of them may want to get 30 or 40 points. I'm looking across, going back to the options question that was asked earlier, what was the options level that I was looking at today? I thought there may have been some support in ES around about the 4393 based on options, but we're way below that now. Okay, I'm just going to go to the YouTube comments just to make sure I haven't missed anything, because there have been a few there by Scott and Pharaoh. Scott, you just asked about the TPO chart. Again, Scott, if you want to DM me in the Discord, I can always help if you use Sierra. If you want to try and replicate that, I don't give out templates or anything there because I don't sell anything, but I can certainly point you in the right direction. Yeah, you can see, yeah, they a whole bunch there. They try to get as many as possible. That's a large number there, 1,250. That's a big sell iceberg. It's not a completely red tail in ES, but if you look across at NQ, it's a significant or a huge majority of that is red on the delta side. And then if we zoom out again and we look at what other levels that they've placed well before this, all these levels are new, but they're finding liquidity, so they will continue to auction in this direction until no one is interested to transact anymore. And if you look also at this, the volume bars, you can see this crescendo of volume. It's increasing there. So you may get a little spike at the end and then a reversal. But I haven't really gone back to see what, I suppose I have. If we look at the values chart here and we zoom in, we're getting very, very close to this value here. Yeah, and you then think, what might they want to do? They might, for example, want to look for stops under yesterday's RTH low, which is under that level there. So you've got to think, but do they have the energy to go all the way down here and down there without some kind of retracement? Usually not, but you never know because we're not here to predict anything. So I'm just looking to see whether we're then going to get to this nice level there. We're still in quite a skinny part of yesterday's profile. So we'll have to see. But it's just an idea that at the moment, if they were to take out yesterday's high or low, yesterday's low looks like certainly the most probable. Okay, has anybody got any more questions or comments? We've only got a few minutes left. I think it's 8:56 and a half. Oh, we've got something there. Because they've been playing so many games, I know that one of the things I like to talk about is these resting sell icebergs above as targets. I often prefer those when I don't see as many games with the way that they've been moving the icebergs around. So that is a bit of a flag to me as just to be wary of. Ordinarily, I'd love to trade towards that because that is an advert that they are providing liquidity up there. So somebody will often take that bait and trade back up to that. And if you can get on their coattails, you can often get a good R-type trade on it. But I just don't like the way that there's been these games with these icebergs here, which is in the way that they've moved that iceberg over several different levels means that I have less confidence in this. Even though statistically speaking, it's got a very good statistical win rate that will get tagged. But there is nothing stopping them just pulling that iceberg, the resting iceberg, at any time. And that is always the danger with looking to tag it. You can't control people. That is an advertisement that they want to trade up there. It doesn't mean that they necessarily will. And you still have to stick to your structures to find your structural setups. Maybe we'll get a spring, just under this low there, and then we'll get a potential trade to trade back up to it. But meanwhile, we've got to look at this liquidity that they're building down here. It's only 233, but there's a potential that they're trying to hold people or drag people up there so they can get back down there. Is this an advert for a quick retracement up here so that they can then smash it down to 4,375? That is the question that I have at the moment. But at the moment, we're in this little micro balance, which again is a little bit bearish. When you've got a balance rather than some kind of retracement, that is bearish to me. Aha, some questions, right. Wider levels. Okay, Alexandra, I will have a look. This is when we tend to go back in time. So I can see that level there has been there for a while, but it's only 153. So that's not exactly a major level. You're looking for something, even in these really thin ES markets, nothing like they used to be. You're still looking, well over 200. And I can't really see one at the moment. So there's nothing from the resting liquidity side to give you that. And if I look across, if I bring across my values chart, and I've got resting liquidity on the right here, you see these horizontal bars, that's resting liquidity. So you can see, there is one way down there, but that's unlikely for today, but you never know. You can see that bar that we just talked about there at 4,370. That's the biggest in the whole of this vertical column. So the answer really is no. Okay, so are they going to have a spring now? Well, we're down, right down at the low. NQ has hit some resting liquidity, or to the extent that it was resting liquidity, it's only been there for about 10-15 minutes, but they held it, it interacted with, and it's given a nice little bounce. So does that mean that ES will then have a bounce back up there? Anyway, I have run out of time. I'm hoping the webinar was okay, that even though I did not have a specific education topic today, that it would still provide a value to you. I just wanted to be aware of what it was that you might want to look for in that London session. And on this occasion, it wasn't necessarily right at the London Open. It was about 20 minutes later or 17 minutes later. Anyway, I hope you have a really good trading day and a good week. I will be back on